Good morning, welcome to Morning Outlook. This is Kim speaking on Friday the 28th of August. So last trading day of the month in real terms, excluding bank holidays of course. What we got, so we've got still day 2 of the Jackson Hole Summit. Yesterday really, symposium even, yesterday certainly continued the volatility, and we may get slightly lesser volatility but still got the potential. We got the Bank of England governor opening it, I believe, today at 1:05 or around about 2:05, somewhere in that region. It's misquoted on some. It's 2:05. Oh, actually, sorry, beg your pardon. It is on the right time. It's 2:05 p.m. But that's right. That is the right time. So he's due to deliver the opening remarks. Whether or not he will say anything about central bank ideas for the UK at that time, particularly following yesterday's Fed Powell speaking and suggesting, as expected, that the rates would be averaged, interest rates would be averaged. It was a typical yesterday. Actually, quick look at this in terms of some of the price action that happened there. Look, so the euro flew up and then flew back down again. So sort of selling on the news, really there, and it's made the euro quite ugly in terms of price action at the moment. But we'll come back to that in a moment. Looking at news then, Jackson Hole, 2 p.m. Let's look for, may get some volatility up around about that time. There's no great expectations there today. It's not a Dickens novel. I would expect it to be more likely to be a bit quieter today, but we'll see. As I said, Bailey's speaking, we may get a bit of volatility. It could affect the pound dollar at least. Aside of that, there's nothing this morning of significance. We've got a lot of low key data that's already, or have had a lot of low key data that's already due out. So I'm expecting these markets to stay quietish. Maybe see a little bit of manoeuvring before 2, but really 2 o'clock may be the time when we see more volatility. How it will react, of course, is another matter, and whether it's tradable, another matter still. But we'll see. Let's look at the markets then technically, quickly through here. Then the euro. All of this week it's been chopping back and forth, and yesterday was no real exception. It sort of broke out some prior highs there, double bottomed along some others. It's respecting this trend line pretty much, so one spike through it, but it's again when it pulled back into the next bar there, respecting this trend line that's running across here at this stage. Erring towards the bullish side, but we've sort of just seeing this hourly, maybe a potential pivot swing coming through there, which would be sort of this quite bullish, bearish little signal. If it triggers to the low there, we could just see it coming back into range. It's almost about time it broke out, but as I said, with another day of Jackson Hole, it may just not go anywhere. I think realistically I'm going to have to wait until later before I can do too much. The pound, no, not too dissimilar. The only thing with the pound, there's been the slightest of drifting to the upside over the week, more so. So you see this 4 bars there, so sort of pushing towards the upside, that sort of upside drift rather than sideward drift. And again, a spiky old day yesterday, even leading into from the day before, midday onwards, it really just chopped along there, spikes then, and this morning, it's pitched up. Maybe this is a sign retracements may give us opportunities. I'll consider them as and when. Dollar yen, weird one here. It really reacted nicely. I was in a short from Wednesday, which we had called in our trading room. It went and got the first target and stopped on the second. It really moved yesterday. We were up 60 pips at one stage, and then it broke out for a break even on the second half of the trade. It got the first target. Must admit, when it was breaking down here, I expected it may follow through to my final target down here somewhere, but just not to be. This morning we got the Japanese Prime Minister's resigned, I should say, and we're seeing a bit of joy from that maybe. Anyway, we'll see how this runs through. Bit bitty, but certainly we're seeing this sort of strength through most of the markets overnight. So since then, so it's not just due to him. Aussie dollar. Aussie dollar again, a bit like the pound, continuation through this week. Really, it's much steeper. It's certainly one of the stronger pairings, if not that way. It's actually the stronger pairing over the whole week, most of the time. Yesterday's chop came in. Look at that, back into the 50. Personally, I missed that, but it's pulled back into its 50 and then just continued its route. And well, it's not of a place where I could be buying at the moment, or particularly wanting to sell. So it's one of those that's just left without me. Canadian dollar, similar-ish route here. It's sort of been heading south there. One thing I noted yesterday, the amount of bond buying and money running into the Canadian dollar is extraordinary. It's double its previous high. So there's a lot of Canadian bonds being bought. It may be the Northern American market where they're just moving money, but it was significantly double, and this could be part of the explanation why we're seeing this Canadian dollar pushing quite so strongly down here. And again, decent trend here. It seems the euro's been that sort of bit of lackluster over the week, and as we're sort of coming towards the end of the week here, this is certainly looking, has looked better for most of the time. Yesterday, Chop Fest as well, so it was a very difficult, and these announcements are very, very difficult at times, how the market plays it. A lot, as I said, the Powell speech was priced in terms of averaging. I've been speaking about it for a couple of days, but I say it's priced in. There was still a reaction, but then the sort of counter reaction as traders thought they'd have a profit take or take advantage. Either way, we'll see. Anyway, S&Ps. Let's get on with the S&Ps here, and well, they didn't take too badly to them either. We had the dip, but we've seen this continued rise up here. Are we getting to the wall of worry situation where people start worrying about holding stocks, but they don't seem to be at the moment in anything. It seems to be continued push up every morning. Look at this, it's had another little climb up there, a bit flatter yesterday actually, to be fair, but it didn't take too long. The averaging idea is good for the S&Ps in terms of we're less likely to see interest rates run up quickly, and that's the thing behind, and they're going to be average. Didn't say they wouldn't increase them if things really got hot, but and they judged them to be hot, but employment's leading the way for the US, and that's really reacting. We're seeing the reaction here on the S&Ps. Okay, which was, as I say, beneficial for the S&Ps there. Right, and finally, just a quick look at oil. Oil flattened out here on this. I was just looking at 60-minute gain. Spiky price action there yesterday. No surprise there. It's just flattened off, come off a bit softer. There was worried about hurricanes, etc., affecting North American production off the shores, off the coastline there. But realistically, there's so much oil slurping around in the whole world that it shouldn't have a massive effect on the price of oil. So that's knocked that one on the head pretty quickly. And gold, see if we can just, there we go, that was just a spike in the price of gold yesterday. This soon came off again, made for these horrible looking markets. In fact, the gold market, the euro market, largely sort of stops by their weekly pivots to the upside, but again, this is pushing through at the moment. So we may see a continuation of this through the day, but as I said, at 2 o'clock we've got Jackson Hole recommencing. What will come out of it this afternoon, I think there's a lot less expectation, so it could be a bit of a quiet one. Okay, that's it for me. I wish you a great day, a great weekend. I'll be back on Monday on the morning outlooks. Bye for now.